Good morning, folks. It's 8:04 a.m. Chicago time on Thursday, the 28th of March, 2024. This is episode number 2646. I want to remind you that derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. How are you guys? How's everybody doing? Hopefully you had a good week this week. A quiet one, just as expected. We talked about this on Monday morning, that it's likely to be kind of a sucky week. We did have some pretty good movement in non-popular or lesser popular products. Let's take a look at what the overall expectation is. The overall market posture is mixed this morning. You can see that the S&P is basically unchanged, completely sideways, really awful range, pretty bad volume, but really not a surprise there. Walgreens reports this morning had some blowout earnings, came in at $1.20 versus 82 cents. Fed's Waller came out and talked yesterday. He's a voter hawk. Saying there should be no rush in cutting rates, that the Fed should target or maintain longer than expected. CoinDesk is reporting that Bitcoin and ETH are likely to face $15 billion in options expiration, so expecting volatility in those products. If you're holding or trading those products, that's tomorrow. Can't trade them in the futures because the markets are closed. PCE ended up coming out today. Very confusing. All the calendars I checked did not have PCE for today. They maintained it for tomorrow, but it did come out a half hour ago. PCE comes in slightly better, 2% versus 2.1% as expected. Claims in line. Claims came in at, if I recall, 210,000 versus 212 expected. What's left for us is the Chicago PMI number for March. Chicago PMI expected at 46. Remember, this number comes out at 942 to members, 945 to the public. So the move, if it misses, is slightly earlier. It is not really, it hasn't been a big mover. Same with Michigan Sentiment. Michigan Sentiment final. The prelim does include new information. The final does not. Expecting 76.5 there. And then we get pending home sales. And then that wraps up today for us. So that's what we've got in terms of news that's on deck ahead. The S&P balance profile. Fourth quarter of last year. Let me look here. You are right. I am very confused. You are correct. Thank you for correcting me there, Charles. Core PCE came in at 2% for Q4. I didn't see that. I appreciate that. So is PCE coming out tomorrow still? Hang on one second. Oh, sound. You're right. Not seeking perfection. Core PCE for February comes out tomorrow. Sorry, I messed that up. Core PCE for February expected at 2.8%, and that's year on year. Core PCE price index for the month of February expected at 0.3%. Again, Fed's Powell comes out and speaks at 11:30 Eastern. Fed's daily at 10:15. Thank you for correcting me. There. Probably should have just taken a week off. So appreciated. Now, tomorrow is really important because not only do we have several things tomorrow that are in play. The markets are closed, but we do get that PCE data at 8:30. We have Fed's daily, Fed's Powell at 11:30. Both of these events are really market-moving events. PCE is a very, very important input to the Fed. Really be careful if you're someone who normally holds positions through the weekend. In addition to that, given that tomorrow's closed in the major exchanges around the globe, Monday is closed in Europe and several other major markets. And so also, tomorrow's the last day of the month, last day of the quarter. So there's a lot going on that is likely to impact the way we trade today. So expecting some volatility, some squaring up of positions at the end of the day today. So be careful trading into the close today. Again, tomorrow is a holiday. No trader bite. Back to the S&P. The S&P is breaking a little bit higher right now, but overall it is balanced. The inventory is 97% short. We just now got into the prior close. You could see that we're just a tick above the prior close, and we only have 11.5 points of range. Pretty poor. I want to share this chart with you here, this important table with you right here. So what this table does is it tracks the relative volume and relative range. So the column that says RRAN is relative range, RVol is relative volume. And you can see, and what it does is it looks at the current minute and compares the value for the current minute for days range, high to low, to the average of the last 20 days of the current minute of that range. And what this is saying is the S&P is 43% today of the relative range that we've had at this moment over the last 20 sessions. And the volume is at 79% currently versus the volume at this moment from 20 sessions ago. Pretty poor numbers for the indices. The NASDAQ's no better, and so on and so forth. You can see from this chart that we have pretty decent activity in currencies: Canadian, the euro, the cable, the Aussie, and then we have crude oil and gold also moving. Gold has had quite a bit of movement. Gold is at 151% of its range from 20 sessions ago, its average range of 20 sessions ago, and 123. So it's 23% more today than the average over the last 20 sessions at this moment. So what this is informing me is that I need to really pay more attention to gold and crude than I do the S&P this morning. Again, the S&P yesterday, until it broke lower, and really it could break at any moment, until it broke lower, was pretty boring. So yesterday we talked about something very specific, and that is, as long as the market stays above this 83 to 85 area, I'm expecting yesterday's high to break. So I talked about how, given the way Tuesday closed, it was very bearish engulfing pattern. We talked about it yesterday at length, And what I said was, the fact that it came right back to balance in the 87, 88 range, and we were trading above that. I'm going to be watching the 83, which is where the breakdown occurs. So I said I expect that if it breaks the 83, then it's likely to flush pretty quickly to the downside. But overall, the way this action is playing out, overall, the expectation is that we challenge the 5,300. So if you watch yesterday's video, we talked about that. And lo and behold, the S&P decided to do both by pushing that 83. So you could see this is the band from yesterday, this green band. It's been carried for the entire week. This still remains our LIS line in the sand. And you could see as it breaks through that 83, we have a quick flush down, and it ends up extending the range lower and getting stuck in the 71 quarter area. Did not quite push into the prior day's LOD. Did not quite push into the prior day's close. So from there, it went back to the day-generated prices. The VWAP looked like it might make a run for the low. The low seemed weak. A lot of collisions at the low. There was pretty good support there. It kept hammering on the bid. Nothing would move. So it bounced back up, and the expectation is it would ram right through, and instead puts in a higher low, and then it finally breaks to the upside. So once that happens, it's just messy in here. Right in here, it's pretty messy. And then it finally takes off and we go neutral. Yesterday's close is new. Yesterday's day type is neutral, extreme, neutral, extreme up type of close. Quite bullish, but the overnight session didn't push the high from the prior day, really. And so what we ended up with is was a session that has high kurtosis, or a lot of concentration, a lot of coiling. Volume, again, is about 50% of where we would expect it to be. So that's saying something. But this neutral extreme close, the fact that we busted the 5,300 is no surprise. The fact that it broke the 83 and came all the way back and busted the 5,300 is not expected when the market is so slow and so thin in terms of volume. But it accomplished it, and it finished near highs. However, the one thing you should immediately observe is that value was left below. Again, the close ran away from value, and then what we have here is a new important area down here in the 92 to 94. This sets up a new area that is likely to be tested. So what we have is a string of single prints all the way up, and a string of single prints all the way up, and we ended up pushing and maintaining the higher low plus the break of the prior session's high. So yesterday becomes the pivot day for potential one-time framing up. This makes the 53.2275 high vulnerable. So not expecting too much. We'll see how the day closes. As I said, end of month, end of quarter, Powell plus PCE tomorrow. A lot going on, and these guys are likely to position for those for that exposure one way or another. Everybody that's going away for the weekend is likely to have to position for that exposure. So they're going to look to neutralize risk on their position, and the instruments of choice are likely to be futures, derivatives in general, futures and options. So we're likely to see some quirkiness in today's trade. So this essentially is an impulse pullback, likely to see a continuation higher. Okay, that's what we've got, expecting new highs. Now, I talked yesterday about The NASDAQ being in the same space, but the NASDAQ um, really broke down and did not recover. So there was a huge divergence between the NASDAQ and the S&P. The NASDAQ did manage to break the one-time framing high. So it did the same thing, but it didn't close. It didn't close as weak. NASDAQ opened at the high yesterday and just saw no buying interest at all. It did not come back. It did move away from this. It moved away from the low volume node at 18,500. It's trading 18,500 this morning. So the NASDAQ is really in a noisy area. This is a line in the sand. This is a separation between two important accepted prices. The NQ is relatively weaker and left an excess high yesterday. So the question in the NASDAQ, and we saw this kind of configuration a little bit ago in the S&P, is that what we're looking for in the NASDAQ is, does it push into the range of this excess? If it pushes through the range of the excess, then the expectation in the NQ is that yesterday's high is likely to be taken out. And excess, when it's left behind like this with a shift in value lower, is expected to stand. This is an indication that market participants saw the NQ as too expensive in those prices, 18,570 or so, all the way down to 18,520 or 518 or whatever it is, where the single stop. This was considered too expensive. And then we moved the point of control lower, we shifted volume lower, and acceptance lower, and here we find ourselves. So this is a condition that sets up something similar to the S&P, where we are likely to just squeeze these shorts today. Very likely. So I expect a test of that value area down there, and then I'm expecting the NQ to squeeze higher given how it's configured and how it's closing. You would expect that it would shift the point of control lower and hold prices at the low. It did not. Instead, it pushed higher, and we find ourselves right at the dividing line. So again, likely to take over the upper balance point, the point of control at 18,558 or so. But if it stays below the 18,500 and it's just not able to recover, then that excess stands, and then what you have is a trade right back down into yesterday's point of control, which is in the 18,432 or so. That's where I would expect the NASDAQ. So what does that mean? It sounds like I'm saying it could go up, it could go down, which is always true for the market. But what I'm saying is watch, because the NASDAQ is right in that line in the sand point. And we want to see how it rotates away from here. We want to see it impulse away, not grind away, to have conviction in that direction. So that's what I'm looking for in the NASDAQ. The CL, so this thing is really having fits and starts. So yesterday I talked about how it impulsed up on a gap, and then it ended up coming back towards this 81 acceptance area. And look at what it did yesterday. I talked yesterday about it, very likely filling in, but most likely this thing is looking like it's likely to push lower. There were several news events overnight, and we come in here with a gap. The gap is that we gapped and we've traded. We've opened, put in a couple ticks above the open, and we are responsive selling into the gap. Crude is not behaving as expected. So the expectation is this is the highs put in, retested at 82.5 or so, and then the expectation is this is a failed auction on the buy side, and so we're expecting sellers to come in and just push the market lower, and it's just refusing to do that. So crude is surprising today. I am actually bearish crude coming into the session. It's already tested the point of control left behind from the high day, the high of this year, but I'm seeing the point of control higher. I'm seeing it basically exploring to the downside, so I'm expecting this thing to slowly trickle its way back into acceptance here. I'm not expecting a gap and go situation in crude this morning. We'll see how that plays out. All right, I'll leave you with that. Good luck today. I'll catch you on Monday. No trader bite tomorrow. Tomorrow's a holiday. We'll see how PCE comes out, what the Fed chair will say. We are very likely to have a gap on Sunday when we come back. So I'll catch you next week. Good luck.